Good afternoon, everybody. Happy Friday, and welcome back to the weekly market analysis for the week ending October 13th, 2023. We'll take a look at asset markets in just a little bit, but I want to remind you to hit the like button and subscribe to the channel. You can also find me on Twitter at Mr. J. Thomason, and you can also follow my weekly newsletter at Substack. The link is befinanciallyfree.substack.com. The first half of it is free for everybody. The second half is for premium subscribers. You can also get a free trial for 7 days. The link to both my Twitter and my Substack are in the description of the video below. We'll start off here on the gold chart because obviously the big story of the last week is the escalating conflict between Israel and Hamas. And just the tension in the Middle East surrounding that conflict. And obviously, hearts go out to people who have lost loved ones, and definitely war is not something, as somebody who is a student of history, the more I've studied history, the more anti-war I've become. So it's obviously very sad, and we're all just praying for peace. And so I hope that any of you who are watching this are well and that your families are well. And obviously we just hope for a quick end to the conflict. But we'll start off on the gold chart because gold has been up quite a bit over the last week from what we're calling the war premium here. If I pull up the weekly chart, just a giant green candle here. Gold has gone up $100 from last week, so up 5.48% on the week. Really strong move to the upside. Couple of things, I'll start off with this. I posted this on on Sunday. I'm trying to remember what day the 8th was. I think that was on Sunday. Just on the news that had been coming out. I basically said, be careful chasing gold and oil. Now, I'll talk a little bit about the price action shortly, but I always would say, I said be careful chasing gold and oil. I do think that both ultimately go up over the next few months, but this is a fear pop. And the concern was that the war premium was going to collapse. And, on gold it hasn't so far. On crude it did, and then it came back on the news today. So obviously the news today has been about potentially Israel escalating the tension. Israel came out and I guess said that they were looking at a potential land invasion of Gaza, talking about telling residents of Gaza to move southward, that they were going to maybe do like aerial bombing and all this stuff. And so that news rocketed up the price of gold. I've talked about this before on this channel. Gold essentially appreciates for one of a few reasons. One of them can be because of deflation. So when you have declines in growth or waning economic growth, then it can appreciate in that circumstance. And then it can also appreciate when there is a flight to safety or a fear catalyst. And that's kind of what we've been dealing with in the last week, is the fear catalyst. And what also contributes to this is, and if you've been watching this channel more recently, that I've been paying a lot of attention to positioning. The positioning actually in gold wasn't too bad, but it was pretty seriously oversold after the moves from late September and into early October. And so one of the things that has catalyzed this is that it was coming out of an oversold condition. And then you add on top of that the fear catalyst, and just gold has gotten bid up like crazy. Now, there are a lot of bad takes out there on the interwebs about why gold is up. A lot of people taking victory laps about how, like, oh, if you thought gold was going to go down to 1800, you were wrong. And, people talking about, like, oh, they knew that gold was going to do this the whole time. And I would just like to, again, point out, like I have before, that back in April, when gold was over $2,000, I was over here saying gold wasn't going to make an all-time high and that it would more likely go to 1800 than make all-time highs this year. And I mean, we didn't get to 1800 exactly. I mean, I didn't mean that it had to go to 1800, but I was just basically talking about that the more likely scenario is that gold goes down then goes up. And honestly, in this situation, like, gold is still, from when I talked about gold not making all-time highs, it's still, about halfway between that spot where I was talking about that and where we just were in price. And the thing with gold is, if you think that we're going to go to all-time highs here, if you think gold is just going to keep going up, 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 up from here, then essentially you're looking at this as like everything's going to hit the fan, and I just don't see that happening. Like, gold can get bid up on these fear catalysts, really quickly, but there's no lasting price change or price behavior from a fear catalyst. It spikes and then it works off and then often will decline. So, like, I mean, we can go back and look at, for example, the gold price spike that came on the Russia-Ukraine invasion. So, we had gold going up in price when Russia invaded Ukraine. It went all the way up from kind of around levels that we started this week at, all the way up to over the 2000 level. And of course, here everyone was talking about all-time highs and stuff like that. And then we never broke the all-time high. And once the war premium wore off, we just ended up giving all of it back and even going back down to, below 1700. And I'm not saying that we're going to go below 1700 here, but what I'm saying is that unless you have one of the other catalysts for positive price behavior in gold present, these kinds of spikes don't generally last. And there's not really an upward drift with gold like there is with, say, stocks or things like that. And so I think, like what I said, in that tweet, despite the fact that, from Sunday gold is higher and all that, and even today I made a tweet about, like, gold could be a short today, and I tweeted that when gold was like only up $42. So obviously, if you had shorted gold, I didn't, but if you had shorted gold at that specific exact moment, then obviously you just got rocked the rest of today. But, like, I still stand by that. I think that that's true, because this type of price behavior doesn't, either the end of the world is about to happen, and, like, we're about to see, like, a massive escalated total war, in which case, like, all bets are off, and, like, what good is your money going to be anyway, or this is going to taper off. And so I could say the same thing about crude oil. Now, crude oil behaved a little bit differently. The thing with crude oil is crude oil had been overbought, and the positioning was very heavy to the long side, and it still is. I could show you that. I could show you guys that. Maybe I will in just a little bit. But crude had a big reversal and was coming off of massively overbought conditions, and is still positioned well long. And so price was coming off, and then we got that war premium spike on Sunday evening and Monday's price action. And then, it basically gave all of that back. I mean, like this candle that I'm kind of zooming in on here from Friday, we closed, last Friday at 82.79, and we, up until yesterday, price got below that, and so, like, we ended up closing below that level. Or wait, I'm sorry, did we close below that level? 82.79. Oh, 82.91. We closed just barely above that level. I'm sorry. So crude did give it all back. I mean, we did fill that gap. The wick came down below that gap. And so crude oil was an example of, like, the war premium fading. But the difference is on gold that you were, instead of it being well overbought and over positioned to the long side, it was actually oversold. And so there, that initial move on Sunday and into Monday didn't have to wear off as quickly like the crude oil did. And then, of course, it kind of stayed up a little bit, and then we got today's price action. And so, gold bulls are really happy today, but gold bulls have been wrong for the better part of 6 months. So I mean, I don't know that there's all that much to celebrate about that, but I mean, if you think about it, gold right now closing today at 1932. I mean, gold hasn't been like people who were talking about gold all-time highs here, like it's still not back to those levels, and so there's nothing really to cheer about here. I thought about, when I saw price action super oversold down here, I thought about taking a long position just for a trade. I didn't, so I missed out on it, and that's okay. I'm willing to miss out on that because I'm not trying to catch falling knives. And another thing too, like if we look at the TLT chart, what's interesting about TLT is TLT and like the bond market overall has been pretty extensively sold, and on the supposed flight to safety, I mean, we've barely mustered a small bounce. I mean, we're only up $3 on TLT, despite the fact that we came into the week with, flight to safety sort of qualities, and today had flight to safety qualities. And so, a lot of people talking about, the 30-year bond has got to, like it peaked and it's going to come down. I mean, I don't know. I'm not so sure about that. Maybe, but one of the things I'll pull up here is if I pull up my flows, if you look over here, kind of some of the panels or some of the sets of bars on the right, like the total bond flows so far in the month of October, or actually, I'm sorry, in September. Let's see, I think something is not right here. The total flows are negative so far this month for the first time all year. They have been positive all year. So, investors are just now starting to sell. We're just now starting to see those outflows. And then if you want to look at the, let me see if I can find, I don't have it up here. Maybe I can't. Let me see if I can pull it up really quick. I'm sorry. Just trying to do this in real time here. If I want to add my bond positioning, like the treasury positioning in the 2-year and the 10-year actually got longer versus last month, as far as like smaller speculators are concerned, small traders, the non-reportables on the COT report. And so all that is to say that like we haven't even, as much as bonds have sold off, we haven't even seen what it could be, the type of selling that there could be. And so, those crude oil and gold and bonds have been kind of like the, not the safety. I mean, like crude is not really a safety trade typically, but it's because, the supply side of the equation is not very good with crude. And then, of course, the Middle East is a big time provider of oil. And so that's going to be bidding up prices and things like that. But despite that, I mean, like, all of that stuff can fade, and I suspect that it will. I mean, I don't know how long all this geopolitical stuff is going to last, but if you forced me to, put a direction on it and like ask me if like a month from now if yields will be higher or lower, if gold will be higher or lower, if crude oil will be higher or lower, then at least on gold and bonds, like I think that gold will make a lower low, or potentially, well, maybe not. Hold on, that gold may, could revisit this low. Maybe it won't make a lower low, but it could revisit the low, and that bonds probably will make another like, will go up a little bit higher in yield, maybe at least one more higher high before coming off. I could totally see that being a scenario. I think that crude is still overpositioned, so I think it will give some of this back and backfill a little bit before taking back off. Anyway, my point is that all of this stuff, you have to be really careful, the takes that you pay attention to on Twitter, because there are a lot of people out there talking about, oh, this is a great time to buy, like, oh, gold's just going to go up from here, or oh, now is the time to buy bonds. And people who have been, trying to long gold or long bonds have been wrong for so long. It's, it's kind of getting old. So I just wanted to point that out. Looking at the equities, equity markets, last week's video, I had mentioned that you could proceed cautiously because the general direction for markets is probably going to be up. And equities on the week, if you look at the S&P weekly chart, S&P is up 0.36% on the week. NASDAQ just is basically unchanged, up 0.05%. The Russell is down. The Russell is close to making, actually the Russell did make new weekly closing lows this week compared to its June and October lows from last year. And then the Dow is up 0.68%. And the Dow is interesting because Dow positioning is extremely bearish right now. And so the fact that the Dow is closing positive here, or has closed positive here, is going to be interesting going into next week. Right now, everyone is talking doom and gloom, and I think that one of the things that we have to consider is is that we've had all this geopolitical tension happening. We've had really bad inflation data and inflation expectations data this week, which suggests that inflation is going to stay sticky. If we go to our sentiment, what's really interesting is bear sentiment is still in the 74th percentile, but that is down 9 or 11% from last week. But the bullish has gone up considerably, went from the 25th percentile to the 60th percentile. And so you have kind of like a barbell sentiment situation where there's much more of a split between bulls and bears and not a lot of neutrality in between. Neutrality dropped from 36th to 18th percentile. And so the bull-bear spread, if you look at it on the time series, if you look at the far right side of this chart, it came up, we're kind of like neutral now in the middle. In a larger uptrend, and so you've got sentiment getting more bullish at this particular juncture, but you've got a lot of doom and gloom out on Twitter, and you've got positioning still relatively short, and actually got really short on the Dow, got shorter on the S&P 500. You've got the flight to safety. You had the VIX spiking again today. And you have to imagine that if the VIX comes off next week, and if gold and bonds, I don't know necessarily if gold and bonds have to do anything differently, but definitely if the VIX starts to come off next week, then and if the dollar comes off because it had been coming off for a little bit, then this might actually lead to some fuel to the upside for equities. So that's something to note. The NASDAQ, interesting technically, bounced off of, or basically almost touched exactly. I think it did. Let me just go to a 1 minute chart. Maybe I'll be able to see a touch here. Yeah, wow, that's pretty crazy. Look at that. On a 1 minute chart, we basically touched exactly the level of that trend line. Over too far. There we go. So, I was looking to see what would happen if we would break above or if we would get rejected. And so now it's just a matter of where price is going to go from here. Are we going to continue falling to the downside? Is this just the beginning? Is this just a little bit of a pullback before the next move up? And I think there's a lot of cross currents, and there has been for some time. And it's one of those situations again where I think the geopolitical tension is concerning, but the caution here is I would say to be neutral probably is the best thing that you could do, because for as much as you may want to get short here because maybe you're like, oh, the NASDAQ is being rejected by resistance, or if you go off of I have my indicators here, the S&P 500 has red candles here on my indicator, which means that it's best to stay out or potentially short. You might want to short these markets, you may feel that, but the problem is that if you think about it, all it takes is the Fed to come out and say they're done hiking, to officially say they're done hiking. I know we've had a lot of Fed speak this week that indicated that a lot of Fed governors are on the side of, oh, maybe yields have already gone up high enough that we can stop. all it would take is the Fed, is Powell coming out and saying, hey, yeah, I think we're done actually hiking. Because, back in, a lot of people will refer to the famous Powell pivot in following the 2018 Christmas massacre, like Q4 bear market. It was January 4th on a Friday when Powell, of 2019, when Powell said, oh, yeah, I think we're done hiking. The FOMC meeting wasn't going to be until later that month on January 29th and 30th. So, they're prone to making these announcements and saying these things not during an FOMC meeting. At least that's what history suggests could happen. So, I mean, it could happen, over the weekend. It could happen on Monday. Somebody could leak out or release this idea that oh, the Fed is definitely done hiking. They won't raise again. Maybe they'll stop QT. I don't know. I'm just giving off different scenarios. It would just take that. The markets would rip your face off if you were short. Or, what if this weekend, because now the markets aren't trading over the weekend, what if over the weekend you have, what if you have, a resolution to the conflict in the Middle East? Well, in that case, gold is going to come off. Crude oil will probably come off. Bonds may sell off even. Maybe they will, maybe they won't. I'm not sure. Equities would rip your face off if you were short. So, that's why I'm saying, I think in this situation, the best thing, if you're not confident, if you don't have a clear trade in front of you, the best thing that you could do is be neutral. Because right now the risk of something changing and then markets gapping up and rate going off to the races next week is actually pretty high. I mean, let me pull up my positioning chart again. I'm gonna just, what I'll do in this case is I'll just pull up S&P, NASDAQ, Dow, and Russell. We'll just do those for the equities. So when you see super bearish positioning, you're looking at, you want to see the red and the blue bars down pretty low. So the NASDAQ is pretty neutral, but the S&P, the large speculators are at an extreme short. The Dow large speculators are extremely short. And then the Russell is, it's not exactly at the extreme, but it's getting there. And so, especially on the S&P and on the Dow, you in aggregate, you've got investors pretty largely short and underweight equities, and so there's enough fuel here to make markets boom. If they're, they could boom anyway, but especially if there's the right catalyst, like I said, if over the weekend we find out that there's going to be a peace deal or something like that, or the war is going to end, this thing will just rip your face off, and you have to be ready for that. So maybe the best thing you could do is be neutral here. Probably not a good idea to be shorting the market into the weekend. So luckily, as you're watching this video, the markets are already closed, so you can't take any shorts right now. But yeah, just a lot of uncertainty going into the future. So I've kind of talked about a lot regarding the war premium and gold and bonds and crude oil and stuff like that. I'm kind of neutral on equities right now. I don't have any positions, long or short, in equities at this exact moment in time. And I think it'll probably stay that way into the early part of next week. So definitely be safe and be wise in your investing, manage your risk appropriately, and live to fight another day. And that's really the name of the game. You got to have capital if you want to be able to, put in the big investments, at the bottoms of different markets. So make sure that you risk manage carefully. And we'll end it there. Again, don't forget to hit the like button and subscribe, and that'll do it, and I'll see you guys next time.